One tweet, just a single social media message. But this message would trigger one of the fastest billion-dollar losses in financial history. Not in minutes, but in seconds. Approximately $40 billion in market value vanished. But here's the most important question. How can a company's value truly disappear because of just one tweet? To understand this, you first need to know modern stock markets are no longer managed by humans, but largely by algorithms. Humans make the decisions, but machines execute the trades in seconds. In this system, the most critical element is information. If a news story is true, prices rise. If it's risky, prices fall. But the problem is, algorithms don't think about the truth. They only execute the reaction. On that day, the official Twitter account of a major technology company was compromised. Cyber attackers gained access, and a fake statement was shared. Explosion at the company facility, CEO injured. This message was not real, but in the first seconds, no one in the market knew it was fake. The moment the message was published, something happened. The algorithms kicked in. Because these systems do one thing, CEO injured equals risk. Risk equals sell. And in seconds, automated sell orders began to execute. At first, small drops were seen, but that was just the beginning. As the price started to fall, human investors also joined in. Because the most dangerous thing in the stock market is this: if everyone is selling, I should sell too. This behavior is called panic selling. As the company's shares fell rapidly, news sites posted uncontrolled headlines, social media magnified it, and investors were gripped by fear. Minutes later, the truth was revealed. This was a hack attack. Nothing had happened to the CEO. There was no explosion at the company building. But in the financial market, there was one truth. When panic starts, the truth arrives too late. The share price recovered after a while. But in the intervening time, approximately $40 billion of market value vanished. This money did not physically disappear, but it evaporated in the perception of investors and in market valuation. This event showed that the modern financial system was now dependent on the speed of news. But $40 billion is not just a number on a screen. For some, it was their retirement. For others, it was their children's college fund or next month's rent. When the algorithm sells, it doesn't care about the family sitting at their kitchen table, staring at bills they can no longer pay. The real tragedy of financial collapse isn't found on Wall Street. It's found on the silent, desperate streets of our cities. And the most critical question is this: if just a fake tweet can create such a massive impact, what happens if a real crisis spreads at the wrong time?